Hello and welcome to episode number 5 of the Abundant Living Ecuador podcast. It is a gorgeous day today here in Loja, Ecuador. Sun is shining and life is good.
And it's Friday.
It is Friday, although maybe Tuesday where they're listening. I am Jesse Bayer here with Darnell Dunn. We're the co-founders and managing partners of Abundant Living Ecuador. Before we get to today's show, let me get the business out of the way. You can reach us on our website, www.abecuador.com. That's A as in boy, A as in apple, B as in boy, Ecuador.com. We also have a toll-free line, 888-999-0948. That's 888-999-0948. And our email address is info@abecuador.com. So jumping right in, where'd you like to start?
Why don't we talk a little bit about financing for our company? As you know, we are growing rapidly, have a lot of opportunities to really create a really strong footprint in the real estate business in southern Ecuador. And to do that, having more capital would facilitate the process. So we're actively looking for capital. Should we talk a little bit about numbers or some things about our story that might attract potential investors? Where should we start?
Yeah, sure. I guess, we didn't come to Ecuador to start a real estate company. We started a real estate company because when we were in Ecuador, we realized the opportunity was so great, it wasn't one to pass up. Some of the background to what makes this such an amazing opportunity, the time and business that we're in, is that when we spent the better part or even a little more than a year here in southern Ecuador looking for land, we realized how the process works, both the purchase process and due diligence process, the search process and due diligence process, and just how many holes there were in the process, in the market itself, in terms of buyers and sellers finding each other. And we realized, hey, we need to start this company to fill a void, to provide a need that's currently sorely lacking in the market in southern Ecuador. So, we're kind of the only show in town and I say in town, yes, in Loja, not to say there aren't other agents, but there aren't other agents going about selling real estate like we are, and there's almost no agents anywhere in any of the towns listing any of the amazing pieces of property that are for sale here.
Right. Because most people in their approach as a real estate agent, you say you're looking to sell your property, Jesse, you come to me, I say, great, I'll charge you whatever percentage we agree on. I put together a Word document with a picture and a couple details about your property, and I stick it on my window outside of my office and hope that somebody walks by and is looking for the property that you have.
Right.
Whereas, as you know, we have a pretty sophisticated approach to how we're going about growing the potential market for somebody's property here, and there's a growing amount of people from the Western world, Europe, Canada, the United States, who are looking for places to live and relocate in South and Central America. So there's a growing market there, and we're really exposing these properties to a wider audience in a way that nobody else, at the very least in this region, is doing. And the fact that we are from the United States and our English speakers is also facilitates the process of allowing us to give potential buyers an idea of what it's like to live here from our perspective, and to help them avoid not only all the pitfalls of buying and selling property, but also of moving to a foreign country where chances are they haven't been before.
Right. Exactly. So, the opportunity here is just tremendous. Basically, we're the only show in town in a country that's growing and in a country that's just now being discovered internationally. And in this particular part of Ecuador, there's just essentially no competition. And as a result of there being no competition, it's just a very new market because there hasn't been access. But people are discovering it now, so it's a chance to really take over, at the very least, the southern Ecuadorian real estate market fairly rapidly, and we have a pretty aggressive plan for expansion in terms of where we're going to open new offices in order to, geographically be able to take on that portion of Ecuador. So it's an opportunity to be the best and only show in town in a region of a country, and could very easily expand from there to the whole country if we go that route.
Right. A couple other points that I think are important to mention. Now we're saying we've got a chance to take over the market. We're expanding the market for properties to other areas of the world that typically haven't been exposed to. But I think it'd be interesting to talk a little bit about how that's being received by potential sellers. So here are a couple of numbers that I think are very interesting to really illustrate that point. Number one, we've got 24 properties under agreement, 17 of which are exclusively listed properties. Generally speaking, people do not give exclusivity to people, and if they do, it's for a much shorter period of time. The longest you'll ever hear of that being done is 6 months. We're getting 12 months. The average commission rate is 3% or so. We have an average commission rate a good amount above that. So we're getting a premium over the properties for selling properties that other agents are getting, and we're also getting more buy-in in terms of having longer agreements than the average.
Right, which just really illustrates well that the sellers have recognized what we bring to the table in terms of the opportunity that's in front of us that we're taking advantage of. So anyhow, we just wanted to throw that out there. We are currently procuring financing, considering potentially taking on investors. We haven't gone down that road yet, but if it was the right fit and somebody was interested, we would be interested in having that conversation.
Right. And, more than willing to open up the books and talk more about numbers and projections and what we feel we can do in terms of business in the next 12 to 18 months.
So, on to the meat of today's show. So we wanted to get into a little bit of investing stuff today. I guess currency would be an interesting place to start. We chatted a little bit last week about currency, about gold and silver, about China. We may have even mentioned a bit, and I think it'd be good to dive into some of the details of those things a little more broadly. We these shows are recorded live. We don't edit. We don't really prepare. So you get what it is. So a lot of this just comes off our head. But maybe we can do a little bit better job of giving you some of the details of the story on some of the things we touched on last week.
Yeah, so in terms of currency, should we start with gold and silver? Yeah, okay. Well, I'll take over this portion of things then. Something that's interesting about gold, you hear a lot about gold and silver, especially in the context of having a strong dollar. So people are saying, well, why would I want to go buy gold? Or, gold is falling in relation to the dollar, or, whatever you might hear. And I think it's oversimplifying what gold is. Gold is really a currency, just like, paper money is. And what's interesting about it, and I think why people should think about holding it, is that it's not manipulated in the same way that paper currency can be manipulated. You can't naked short sell gold because you can't just print it. There's not enough physical gold out there to cover all of the contracts that are out there. So somebody might say, well, I own GLD, which is in what's that?
The ETF.
Yeah, the ETF. Yeah, an exchange traded fund of gold, and say, well, I own gold because this is backed by it. Well, how is that actually going to work when you say that you want to get the gold? Okay, give me the gold that I own, that this paper says I own. There's a lot of things that can happen there, and if there's not enough gold in the world to cover all of the claims that are out there, well, then what do you really own?
Right, and that's such an important factor when you're looking at gold and silver. These are markets that are manipulated down in price in terms of paper price, and there's two reasons that they're able to do that. One is what you mentioned, the brokerage houses don't back the paper contracts with gold. So you could have a certain amount of gold in a safe somewhere that's backing 50 times, and I don't know the exact numbers, nobody does, people make estimates, but are backing 50 times the amount of gold that they have physically in a paper contract. Whether that's a futures contract or part of an ETF or any other form of paper ownership of gold. So you have a situation where you can have demand increase by a lot for paper gold, and they can just keep writing new contracts without having to supply the actual metal. So the actual price of the metal is not so very related to the paper price that you see going by on the ticker. And then, of course, the other thing with silver in particular, I believe it's gold as well, although I forget actually this fact, but the silver markets certainly, and I assume the gold markets as well, you're allowed to naked short. So what they do in those markets is they can put downward pressure on the price of the metal without having to borrow the actual shares to do so. So normally when you're short selling a stock or you're short selling anything, you have to borrow those shares from someone that holds them in order to be able to place the short on it. So there's a mechanism that limits the amount of
downward pressure,
yeah, the amount of manipulation that you could implement on the asset. Paper, gold, and silver, well, I'm positive about silver, I forget with gold, but paper, silver, you can naked short without any limit on that ability. So what the big houses do, I believe it's J.P. Morgan mostly with silver, but they when they want the price to go down, they put a lot of naked shorts out, and that puts the downward pressure on the metal, and they control the paper price that way. So you've got some fundamentals just on those two things that make you understand that the price that you can buy gold and silver for right now with paper dollars versus what that physical asset is actually worth is not connected, and you're going to do very, very well on that.
Right. The other aspect of it is that it can't be inflated. You can't create gold or silver out of thin air. So because there's a limited quantity of it in the world, and banks and other financial institutions aren't in charge of its creation, and it's not being created at interest either.
Right.
That
caveat.
Yeah, very important caveat. Well, then now you really have a store of value in a way that fiat currencies just can't provide.
Right, and just to run through, the history of that really quick, throughout history, and I mean as far back as anyone can go, and of course there's been some other systems, but gold and silver have been money. Gold and silver are money. With Bretton Woods in 1944, the dollar became the convertible currency for all other currencies in the world, but the dollar was backed by gold. So all of the other currencies in the world were backed by the dollar was backed by gold. In 1971, when Nixon closed the gold window, it was the first time in the history of currency in the world that currency was no longer backed by a physical asset, namely gold or silver. So this is a 40-something year experiment that we're on here of fiat currency, of debt-based money without the backing of gold and silver. Mike Maloney, who I enjoy his stuff, he claims, he put a figure out there that says, and this is actually a little bit old, it would be quite a bit higher now because it's related directly to how much money is in circulation. He makes the point that for gold to back the currency that's currently in circulation, and this would have been like 2010, it's currently in the circulation, gold would rise to $15,000 an ounce. Just to back the currency as it has been throughout history and as it always returns to right now. Another example of inflation as it relates to gold or silver, in the 1980s, and I don't have the exact numbers in front of me, but you can look them up. In the 1980s, for example, in 1979, if you sold a home for the median home price of that home, you took that money, you put it in metal, you lived through the inflation of the 80s, and then, late 80s, early 90s, you took that metal, converted it back into homes, you would have gone from something like 1 home to 17 homes, or whatever it is. I don't remember, but you would have and that's an important thing as well connected to this subject is when you're looking at assets and you're looking at investing and you're looking at the value of things, be careful what you're denominating it in. So I can say like, hey, I bought this house in 1950, or my grandfather bought this house in 1950. He spent $6,000 and I just sold it for $2 million. So, I'm rich. Okay, maybe. But did your spending power increase or decrease from that $6,000 to whatever price you sold it for, now?
Yeah, guaranteed you could buy a lot more with that $6,000 that your grandfather bought that house for in 1950 for not much more than it. It's like the number doesn't really tell you much about what you're able to buy with that money. And so if you were to look at that same example of how much gold and silver could you have bought with that amount of money now versus then,
exactly,
or how many loaves of bread could you have bought, or how many gallons of milk, or something like that. Because ultimately, all a currency is a medium of exchange in a store of value. So if I have a car and you want my car, well then, I'm going to sell it to you, but then I need something in return. So the paper is something that I take in return because I think it's worth something. But, that equation can easily change, given the example that you were just talking about, if we took all of the currency that was outstanding in 2010 and tried to back it by gold or silver as it has been done in the past.
And that, that equation always does change. It changes every day. It's called inflation. So, the value of your currency decreases every day, every single day. So the idea that somehow holding your wealth in currency is a good idea is just wrong. And it's always been wrong, and I'm not sure quite exactly how they've convinced people to think that way, but it's just wrong. It's the same as like it would be like holding your assets in a car. It's a devaluing asset, just like a car. So, if you go and look at a chart, for example, of the value of the dollar over time, it just goes down. It doesn't go any other direction. So and of course, that chart is going to look the same, that chart is going to be inverse to the money supply chart, or to an inflation chart, or to almost any other chart of any asset priced in dollars, because
right.
The more dollars are produced, the more dollars it takes to buy whatever the thing is, or to purchase that share of stock, which means the stock, quote, price is higher, but priced in what? Priced in dollars, but the dollars are worth less.
Right. Yeah, it's just like saying the more dollars you print, the less each dollar is worth.
Sure. Exactly. So, gold and silver is just a tremendous, tremendous investment for a lot of reasons. Obviously it holds its spending power over time, and that's what you're interested in, spending power. You're not interested in the figures in your bank account. You're interested in how much of X can I get for what I have? And that's only going to go down if you're saying how much of X can I get for what I have in dollars. Unless your amount of dollars is increasing at a faster rate than they're losing value on, then you're losing money.
Right. And we talked a little bit about how we look at real estate here in Ecuador as similar to gold and silver in terms of having some of those same characteristics. One thing you'd say about Ecuador is that they're just like gold and silver. You have an asset that's not really leveraged to financial markets, in the sense that you have a market here that's historically been a cash market. So, if mortgage rates go up by 2% or go down by 2%, that's not really going to have a material effect on the outstanding land that's available to be purchased.
Yeah, I mean, even if the debt markets collapsed, even if the dollar collapsed, would real estate in Ecuador lose some value? Sure. I mean, if you're in the cities, you'd probably lose a lot of value. If you're talking about a large, productive piece of land, you may go up in value. I'm not sure, but you're not gonna lose your shirt. That's for sure.
Right.
I would just also, jumping back to the gold for a second, if you're thinking about buying gold and silver, my advice for you would be to buy coins. There's a few advantages of coins that coins have over bullion, over bars, and that is number one is that they have a face value. So, for example, if you're buying a U.S. Eagle, which is a 1 ounce eagle, and its value, quote value, might be whatever, is whatever the spot price is that day. So maybe it's, $1,000, $1,200, whatever gold's at. But the face value is $100. So for travel purposes, if you're traveling, you're reporting that as a monetary asset of $100, and that's how you're supposed to report it. So you could, for example, move around a lot of assets unreported in that way, which is a nice benefit of coins. They're easily recognizable. So if you're looking to sell coins versus bars, they're much easier to sell, and they're harder to counterfeit. Bars are easier to counterfeit than coins. Not that you can't counterfeit coins, but they're harder to counterfeit. So there's some nice advantages to coins over bars.
Right, and we actually have an anecdote about coins versus bars when we were traveling to Ecuador. Don't want to get into that, huh?
Don't want to get into that. Sorry.
Fair enough.
Forgive the dead air, awkward radio moment that I caused.
Well, we'll tell you what. If you guys come down to see us and want to look at properties, we'll tell you that story offline.
Absolutely. So that's gold and silver. A little bit on currency. I think another thing to mention about currency. Currency also has an intrinsic value, like other assets, and its intrinsic value it would be the paper that it's printed on. However, it's not worth the paper it's printed on because they've drawn on it. So you can't even use the paper that it's printed on. So its intrinsic value is zero. It has no backing, and it has no value outside of what people think it's worth. And
it's not soft either. So you can't use it for that.
Oh, that's very funny. That's right. So literally has no use. That's hilarious. And if you look at the monetary history of the world, all currencies return eventually to their intrinsic value. All fiat debt-based currencies return to their intrinsic value of zero. So, go study the currencies of the world. Generally, they have a shelf life of, 40 years or so, and they return to zero. Now, the U.S. has gone on a lot longer than that for reasons we've chatted about before, but for structural reasons that were, put in place with trade deal or with deals, agreements, treaties. So, you don't want to be in currency. And you don't want to be in things that are tied to currency should the currency go through a major downward spin. And downward spin means inflation, because that's what we're looking at, hyperinflation. I mean, the Fed has printed into oblivion now starting in the 70s, but increasing dramatically in the mid-2000s. So, you can look at a chart, for example, of the U.S. money supply, and it's almost the same chart as other countries in the world, the euro and others. You can look at a chart of the U.S. money supply, compare that chart to the chart of other countries that have collapsed, their currency has collapsed, and you will notice something, it's the same chart. So what happens is mathematically there comes a point, because money is debt-based, because every new unit of currency is issued at interest, when there comes a point on that chart where you can't print new money fast enough to pay back the debt on the old money. And so that is when you get to collapse. There's other reasons you can get to collapse as well, and we've got those boxes checked as well. If you're talking about the dollar, but so that's There's just there's no argument to be made for keeping your wealth in fiat currency or assets levered to fiat currency.
Right, because once they're levered to fiat currencies, then they go the way of fiat currencies.
Yeah, and we touched on that last week, but that includes most of the world's real estate. If you're in a market where the value of real estate is determined by access to the debt markets, and you're dealing with a currency crisis, you're talking about a collapse in real estate prices. I mean, look at the U.S., for example. I saw a statistic the other day, and I'm sure I'll get this slightly wrong, but I saw a statistic the other day. There's something like 6 or 7 or 8, something like that, homes that are vacant in the U.S. for every homeless person. So what does that tell you about the intrinsic value of the asset? There's no shortage. We're not talking about something that there's a tight market, like there's not enough homes for people in the States. People keep bidding up the prices of homes because they can go and borrow more money to do so. But if that were to go away, it's not like homes would be so valuable because there's not enough of them. There's no. You're not talking about a tight supply and demand picture. You're talking about
Yeah, right. No, I mean, just go to Detroit. There's plenty of homes there.
Yes, Las Vegas and parts of all over California, Florida, right?
Right. But yeah, that's the thing is that
Baltimore.
Hartford, Connecticut.
There's some really ugly cities in the Northeast.
Bridgeport, Connecticut.
If anyone's from Connecticut out there, I'm sorry. I love you. I got a lot of friends and family in Connecticut. Man, there's some ugly cities.
Well, Jesse's a lot more diplomatic about Connecticut. Connecticut is the armpit of America.
Come on. Maybe New Jersey.
I mean, they're going toe to toe for the crown.
Both states I like and have family in, by the way. So, although New York certainly, refers to Jersey that way, I suppose, and they literally take a lot of New York's garbage. So perhaps there's some validity to that claim. I'm not sure, but So I think that covers a good piece of the currency. I mean, obviously, and we touched on this last week as well, but the demand side for the U.S. dollar for the currency is equally as bleak. That Bretton Woods agreement, which locked in the dollar as the world's reserve currency, is being threatened.
Right. And China, we touched on that a little bit last week with some of the things that China is doing to grow the demand for their currency, and all the things that they're doing to position themselves to be added to the special drawing rights for the International Monetary Fund. So that is... You've got a lot of major emerging economies like Brazil, like Russia, or South Africa as well too, who are positioning themselves to be able to circumvent the dollar and to trade directly between themselves, which is going to lower the demand for the U.S. dollar. Because a lot of the demand for the U.S. dollar is for trade. If everything on the world market is denominated in dollars, well, I need to trade my currency to dollars before I buy whatever it is that I want. And so because of that, the demand for the dollar is artificially high with respect to other currencies that are not the world's reserve currency.
Right. So, I mean, think about what would the dollar be worth if that situation changed, which it is. Because historically, and again, this goes back to Bretton Woods, you have exactly what Darnell said. You have a situation where everybody in the world needs to buy dollars before they purchase goods. Well, so that demand has been there since the 40s. So if that demand were to go away at the same time that the U.S. has been printing in historically unheard of levels, what would happen to the value of that particular currency?
Well, then the currency would be based just on, the value would be based on just what every other world currency is based on, which is what people believe are the fundamentals of the economy and what they can get paid for lending their currency to the United States, which would be, the equivalent of buying treasury bonds. Well, if you think about the United States in the context of the rest of the world, and a lot of people are buying dollars because they feel, well, the U.S. economy right now is the best house in a bad neighborhood. You've got GDP growth of 3%, but I think they're hiding a lot of I think the headline number hides a lot of the issues. And as evidence of that, I would point to the Federal Reserve and their reluctance to raise interest rates. Now, they're saying that we've had the longest bull market in history, yet the Fed is so scared that growth would come in lower than expected if they raised interest rates from 0 to 1/4% after they've been 0 for, 6 or 7 years now. How strong can that recovery really be if the monetary authority of the United States is afraid to raise interest rates that small of a percentage? If it's that fragile, well, how good is the growth really?
If you want to look at the quote recovery, social program payrolls. The word is escaping me, but what's it called when people?
Food stamps.
Food stamps is an example.
Yeah, that chart that we were looking at.
Yeah, so food stamps are at or near all-time highs in terms of the number of people receiving food stamps, and the number of people in the labor force is at or near all-time lows. So there's your recovery.
Right. Another point to mention about the labor force is what a lot of people don't realize about the unemployment rate is you're only measuring the unemployment rate of people who are in the labor force. Well, if you've stopped looking for a job after a month, you're not in the labor force anymore. And if you have a part-time job and you're underemployed, you're not counted as somebody who doesn't have a job. So that doesn't get included in the calculations of the unemployment rate. So it stands to reason that if you're on the government dole in the sense of getting food stamps or other government benefits and are not working as a result, well then you're not in the labor force. And so those top line numbers look much better than they actually are and are not indicative in any way whatsoever of the real economic picture of the country.
Right, exactly. I mean, all government numbers are heavily manipulated. Shadowstats.com does a decent job of coming up with more real numbers in terms of inflation and unemployment and those kinds of things. But yeah, I mean, they've been changing the formula all along. For example, on how inflation is calculated. So, if you, for example, and I don't have the specific numbers, but if you calculate today's inflation using the metrics that they were using, 30, 40 years ago, I don't know, that even the government numbers, we're at like 7 or 8 or 11% or some much higher number of inflation that they tell us is practically zero, is 2% or whatever, whatever they say.
In another way that they hide inflation, and this is something that we didn't really get into last week, especially with food prices, is what they'll do instead of raising prices on packaged food is they will maintain the same price but shrink the portion. So it may look on the top line as if, I'm still able to buy milk for $2, but if I'm buying 3/4 of a gallon instead of a gallon for the same price that I used to buy a gallon for, well, that's inflation.
Yeah, absolutely. I didn't know about that. That's interesting. All right, where do you want to go from here?
Let's see.
Talk a little bit about some of the market pressures on Ecuador right now.
Yeah, I think that's a good place to start to give people an idea of what the lay of the land is market-wise here.
So it's an interesting time to be a buyer in Ecuador, I would say, because there's a number of factors that have made it so there's a lot of sellers, a lot of people looking to sell, and making it very much a buyer's market. Some of those factors, people have made a lot of money in real estate over the last period of time because of how much dollars have been printed. So I don't know if they've, again, increased their buying power, but their homes are worth a lot more in dollars than they were, however many years ago. So a lot of people are just cashing in. A lot of people feel like they've made a lot of money and they're cashing in. Again, I don't know that their buying power went up, but it wasn't all that long ago in Ecuador that $1,500 would get you a home. Like a real home, like a piece of land and a house. So that guy's selling it for maybe $100,000 now, $80,000, 100. He's done. He thinks he's done quite well, and maybe he has. I haven't looked at that.
Well, something to sort of put that into context that we hadn't talked about offline is the amount of people who came here after 2008. You had a lot of Ecuadorians who had left the country after the currency collapse in 2000 and went to places like Italy, Spain, the UK, and the United States to earn a living, because essentially at that point here you couldn't. So all those people left. They found work, they made lots of money, and in 2007, 2008, in all of those places, you had essentially the worst economic situation since the Great Depression, and as a result, a lot of those people came back and brought their euros or their dollars here to Ecuador. In addition, a lot of Americans, especially, who were looking to retire, they took a big hit on their retirement savings. They're now looking for a place where they can go and stretch their dollar. Find a place where they can, live on Social Security potentially, because they certainly can't do it back home. And Ecuador was one of those places. And from about 2008 to 2013, you had an influx of people who were coming and buying up a lot of those properties. And so, those property prices moved up quite a bit, and the property market here completely changed over that time frame.
Right, and still comparatively very cheap.
Cheap, right. Although
so
much
interesting, yeah.
Comparatively still very, very cheap, because over, in that same period of time, because of all the printing that the Federal Reserve was doing and all the money printing that's going on in all over the world, asset prices began to rise as well too, from a very depressed level. And so now when you compare real estate prices back home versus real estate prices here, here is still relatively cheap as a result.
I mean, to illustrate this, they also built roads. So, okay, I've got this piece of land, and if you want to drive there, it'll take you 6 days, and you'll have to bring spare tires with you, and a guy will have to walk out in front with a shotgun to make sure that you're still on the road, and you don't get attacked by anything. Okay, it's worth $1,500. So they also built roads, built everything. The infrastructure here is excellent now. So of course that's going to also allow for some price appreciation as well. But for whatever reason, people feel wealthier in that way, and so there's a lot of people selling for those reasons. Another factor is that credit is a fairly new phenomenon in Ecuador, and so people went out, and the interest rates are very high here, and a lot of people are just sitting with loans they can't repay. It's much more difficult to get a loan here, so if anybody has a loan, it means they've put a property up against it, and very often they've had a number of people sign to be responsible for it if they don't pay. So they're under more pressure than somebody would be under back home, or in the States or Europe, to sell a property to repay a debt, because if they don't, they'll lose a property. Their friends and family very possibly are on the hook, and a lot of them are in. It's a tragic situation. A lot of them are in 11, 15, even 16. I've even heard 18% interest loans, and people here don't make a lot of money. So
yeah, I mean, minimum wage, which has risen quite a bit in the last 6 to 7 years, is what, $350 a month.
Right.
So juxtapose that with a 16% mortgage. That
Right.
math doesn't work.
Or personal loan or
Right.
anything else. Yeah, I mean, if you're getting a personal loan here, you're not getting it's secured. You're not getting an unsecured personal loan here. Even as a business, I mean, as we found out recently, we've got assets to put up against a loan. We've got a business. We've got personal savings and all these. And it wasn't super easy for us to get a loan. The best interest rate so far that we've come across here for us to get money is 11%.
11% on an over-collateralized loan.
Right, on an exactly. So that so a lot of people are selling for that reason.
Right.
Older generations want to sell. They want to give their children money as opposed to land. The government has
Or their children want land in
money instead of land
as well too. There's a little bit of both.
Yeah, no, absolutely. In fact, that's another reason people are selling, is because the kids want to live in the cities. The younger generations don't want to live out on the pieces of land that they grew up on or that their family has. They want to move to the cities and live in the cities. So that's another reason. So older generations are selling to avoid some of the government policies and taxes surrounding inheritance. For example, in Ecuador, you don't get to just decide where your land goes when you die. The government has a way that passes on to your children that you don't have power over. So a lot of people sell before they pass away so that they can divide the money amongst their children in the way that they choose.
Instead of having 8 kids fighting over their inheritance, which is more viewed as a right than a privilege. It's like, well, I'm the child, so I get X. So, that you hear quite a bit about those fights between heirs of, certain assets.
Yeah,
for sure.
Absolutely. And, some people, some wealthier Ecuadorians just prefer to have their assets out of the country in places like the U.S. Bad choice. But, so a lot of people, there's not a lot of demand here for that reason nationally. The international demand is picking up, but there's not a ton of demand especially for land. It's like cities are not cheap here to buy properties, but for land, there's a lot of it. Most people want to sell, and Ecuadorians are not lining up to buy it. So if you're looking for land, there's really a lot of factors that's in your favor as a buyer.
Absolutely. No, and there's also been some uncertainty as a result of some of the policies that the government has put forth for proposals with a capital gains tax that would be significantly higher than the current one, as well as a higher inheritance tax that would basically cut the threshold at which you would be required to pay inheritance tax or estate tax in half. The issue with that is they're using as a stat to justify passing the law, which again hasn't been passed yet and doesn't look like it will be passed in its current form, that only 3% of people are subject to this tax. It's a tax that only impacts wealthy people, and we need to take this money to redistribute it and further the success of the quote-unquote citizens' revolution.
But at least they don't yet have socialist sneaker here.
Was that diplomatic enough?
In Venezuela, I saw recently.
Oh, you meant to get to this last week, and you didn't talk about it.
You gave me the opportunity. In Venezuela, a openly socialist country, where they also had, many revolutions, people's revolutions by all kinds of names.
Yeah. I mean, could you get any more? Is there more of an oxymoron than revolutionary government?
Right.
I mean, that's right there with the jumbo shrimp and adult children.
So the current president, Nicolas Maduro in Venezuela, who is, currently dealing with things like food shortages, basic staple goods not being available,
Right.
people robbing you, people trying to rob government facilities for things like cooking oil because the government has taken over food production and those kinds of things.
I actually have a friend who was there, my old roommate. Yeah. His father lives in Venezuela, and he had gone to visit him and he stayed there for, I don't know, maybe 6 months or something like that. They have a quota of how many chickens you can buy in a week. So, for a family of 4 or something like that, you can get up to 2 chickens per week. It's like the way they used to ration gas in the States during the energy crisis. It's like, if your license plate starts with, A through F, then, you can go on Monday. And
No, I mean, I have my ex-brother-in-law lives in Venezuela, has a government job. Otherwise he wouldn't be there. Has a government job. I guess everything's a government job now in Venezuela. I guess that's also an oxymoron because all jobs are government jobs in Venezuela. But
I heard an interesting stat about government jobs here. I'll get into it after you finish.
Okay,
very interesting.
He's been protected to the sense in that he can buy food because he works for the government. He works at the airport. But he's leaving or in the process of figuring out a different place to live because of the things that have gone on there. But I remember a story he told me years ago when Chavez was up for quote election. They had people overseeing the voting process. If he were to say anything bad about Chavez or if he were to vote against Chavez, he would have lost his job. So that's the wonders of socialism in Venezuela. How did we get on this tangent?
If we were, we were talking about, revolutionary government.
Yes. Yeah, I mean, Ecuador's government, is ideologically aligned to a large degree, I would say, with places like Venezuela. The difference is that the people seem to go along with it for a long time in Venezuela. The people here have had enough of the socialist agenda, thank God.
Right.
But
that certainly impacted some of the uncertainty about Ecuadorians buying properties. Something else that ties into that, that a friend of mine was sharing this with me. He has a friend who runs the Office of Tourism through the Ministry of Tourism here in Loja, and he was saying that he's got 22 employees that work there. This friend of mine owns a gas station, and he recently had someone from the Ministry of Tourism come to inspect his bathrooms at his gas station. And I don't know what tourism has to do with gas station bathrooms.
But they're paying someone to inspect them.
Yeah, they're paying somebody to inspect them. The person was from Quito. They sent somebody from Quito to look at something in Loja province.
Governments are very efficient enterprise.
And so the head of the office here in Loja was telling him that I've got 22 people in my office. If this was a private business, I would have 4.
Right.
And so if you think about this,
if it was a private business, it wouldn't exist.
Well, fair enough.
But absolutely, point taken.
So you've got 16 million people in Ecuador. Half of those people are either elderly and out of the workforce or too young to be in the workforce. Sure. So you have another 50% of 50% of the population who's could potentially be in the labor force, and out of that 50%. Something like half of those people maybe 2,000 to 3,000 of those 8,000 are unemployed. Another in between the rest of them, I don't know, the 5 or 6,000, about half of those people work for private enterprises and half of those work for public enterprises. And if you think about it, I mean, all of public enterprises are essentially expenses because they're services that are not, if they're bringing in money, they're just robbing Peter to pay Paul, because they're charging people,
and they're taking a cut of that.
Yeah, and they're taking a cut of that. So essentially, you've got a private sector workforce of maybe, anywhere between 4,000 to 4,000 to 200, to 2,500 who are supporting the entire economy. Essentially.
What do you mean?
Well, excuse me, million. I'm sorry, million people. Not
I was
thousand.
waiting until you finished to clarify.
Yeah,
You meant million.
Million.
Yeah, okay.
Yeah, right.
Got it. Now I'm with you.
Yeah. So essentially, 4 million to 2,500,000 who are private enterprises who the government just takes all their money, or half of their money when
Right.
they produce stuff.
Oh, I mean, I don't want to get too. I'll just get upset if we keep giving examples of these kinds of things. But I mean, a friend of mine, of ours, recently, told me a story. Her father was in the mining industry, and he had a successful business, a successful mining operation. This was a gold mine, and he has since been shut down, and the government has stolen all of his equipment. Now, they don't say they've stolen the equipment. They say that they're holding it for him, so that. Oh, sorry, there's a dog going crazy outside the window there. But they say that they're holding the equipment for him to make sure that they don't, mine the mine. God forbid, his mine.
Okay.
So he's lost his business. He's lost, obviously a good portion of his wealth that was tied up in his work.
He can't just sell the equipment? Well, maybe he doesn't want to.
I don't know. Yeah, I don't know. Well, at this point, I would say no. I mean, I don't think he can get it. I mean, I think he's trying to get it back and can't. By the way,
we're going to hold this for you, but if you get any closer, we'll shoot.
Exactly. By the way, it's the Ministerio de Ambiente, which is the environmental agency in Ecuador, who's holding his equipment under because we wouldn't want any it's like Agenda 21, if you're familiar with that. They're making sure that the environment doesn't get hurt, so they're gonna close your business and steal your stuff.
So are they currently using his mining equipment?
Yeah, good question.
We're just going to hold this for you. We're going to use it, make money. I guess that's something that the government could say that they're producing, right?
Right.
They're going to steal your equipment to produce stuff.
Well, what was that great quote you told me by Correa? What about the private versus public sector?
Yeah. I mean, that's public sector innovation at its finest. Hey, let's steal the stuff that you paid for and paid us taxes on, do stuff with it to earn money for the government. I mean, and give you nothing.
But what was that? You told me like he was making a speech.
Yeah, he said
something.
Do you remember? Yeah, he was saying, I forget who it was to or what it was about, but he was saying, he was being interviewed, and he said, I don't know about the private sector, but the public sector is innovating.
Right. Another oxymoron, public sector innovation. I mean, so there's certainly some of that here in Ecuador. I think that tide has turned. I think people are, I wouldn't say I think, it's just a fact. People are very fed up with those kinds of things now. The government is not able to push through some of those agendas now. And Correa supposedly is coming up for election, although he's made some noise about wanting to stay on.
But it's that kind of uncertainty that creates investment opportunities.
Absolutely.
When you have divergent opinions about what, how something might impact the economy or what way one trend might go, I think that's the reason why you've got so many high-quality properties that are available for sale. And for somebody who, has the wherewithal and has the interest and is looking for the things that Ecuador has to offer, now is a very good time to consider, buying, or at the very least taking a look at the options that you might have if you did want to buy.
Yeah, I mean, I would make the argument if you have a contrarian investor streak in you, not that you need one to invest in Ecuador, but if you do, I mean, I think you're looking. It's kind of like I would kind of equate it to selling the market at the top and buying at the bottom, whether it's the stock market or any other. It's like, what are Ecuadorians doing to, I don't know how large a degree, but certainly to a decent sized degree. They're, for all the reasons we just discussed and more, they're wanting to sell properties to some degree, get their assets out into other financial institutions to some degree. So that, and the reason they're doing that is because of all of these things that the government was doing that seemed for a long time like they could go on forever. So where are we at now? The government can no longer get these proposals through, yet those market dynamics haven't changed. So you can jump into a buyer's market for all the reasons we talked about at sort of the height of the fear of those factors we talked about, and pick up something in a situation that can only improve because the people won't allow it to go any other direction at this point.
Yeah, I think that's a good way to look at it. And I would say investing in this market, I think you have a different set of risks than you do have in other markets. And in 3 risks that I've identified that I think any investor should be thinking about here is number 1, political risk. We just talked about that. The other one is liquidity, because you don't have international buyers lining up to buy properties here. If you are looking to yet, right, of course, yet, but we're talking about right now, but absolutely yet. Liquidity could be an issue if you were looking to flip a property over a short period of time. So I would recommend looking at properties that you would like to own for multiple reasons, not just because you think the price will appreciate over a short period of time. And the other risk as well too is that you have a shallow market because you just don't have a lot of capacity, because people are buying properties here because they really like them, because it has some kind of characteristic that they like, as opposed to it's cheap and I can borrow money, so I'm going to buy it. And as a result, you have people who are buying properties just for the intrinsic value, and because of that, you have a much shallower market. It's not as deep, and as a result, not as liquid. So those are 3 risks that I think you should seriously consider before taking the plunge in purchasing property here in Ecuador.
Interesting piece of that, and also in terms of valuation. Outside of the cities, land here is valued by its productivity, whether that's cows for milk, or whether that's stuff that you're growing, or whether that's timber, or whatever you're using the land for. It's valued based on its ability to produce. So that's just another interesting. I don't know that that's so much the case in the States, for example. I think it's more like, well, hey, it's this area, it's this neighborhood, it's this part of this place, it's got ocean, or whatever.
Right. Or because this person values this in this way. It's much more so looking at what other people value the aspects of your property in the way that other people value them.
Yeah, and just for different reasons, just for maybe social reasons, or these are where these people live.
Right. Yeah. Although there's a little bit of that too here
in the cities.
Yeah,
I mean, the city's valuation here is kind of insane, but for land, it makes a lot of sense the way properties get valued.
Right.
Yeah, I mean, it's also, we were talking earlier about currency, and let's just take you down a hypothetical road very briefly. Let's say that the inevitable happens in the U.S., and I don't have a time frame for that. Time frames are impossible, but the inevitable happens in the U.S. and the dollar hyperinflates or has some sort of major hiccup. I mean, the U.S. is not a place to be in that kind of environment. I would argue Canada, Russia, or Europe, and other places are also not great places to be in that environment. And the U.S. supermarkets, for example, have a 3-day food supply. And your food in the U.S. comes from a couple of places in the country, a few at best.
Yeah, one of which is having one of the most serious droughts in the history of droughts.
Right. So
in California.
So if there was a seize up in the financial markets and the debt markets, if people lost confidence in the currency because of hyperinflation, you would have a situation very quickly in the U.S. where 400 million people, something like that, many of which are armed, are out of food, and you've got a government who is also armed to the teeth, who would be very interested in keeping order and play out however they want. That's kind of one scenario. Well, if you're in Ecuador, very sparsely populated country, most people grow food who live outside of the cities. People live closer to the land. It's not really a big change if the currency were to alter. I mean, they went through it not that long ago, actually, when the Sucre collapsed. You can't. The furthest away by car that any food would come from in the part of Ecuador that we're in would be 7 hours, and that's just fruit. Anything outside of fruit, the furthest away would be like 3, 4, 5 hours, and 80 to 90% of it would be within a couple, within 2 or 3, and probably 50, 60% of it within an hour and a half. So
absolutely,
very different situation that way. Quito and maybe some of those places would be in bad shape potentially if there was some seismic shift in the currency or the economic situation. But people would barter, and people would just kind of go back to what they did maybe not all that long ago. So just another interesting caveat, interesting note on that.
So I think we leave it there at this point. Do we have somebody scheduled for an interview for next week?
Not as of yet. I would say grab another guest for you.
Yeah, either way. With that, we'll tell you guys to have a great weekend. Thanks for joining us for the 5th Abundant Living Ecuador podcast, and we'll be back next week with more. Thanks again. Take care.